push in a firm, up 10%. Energy, strong move in energy name, above 200-day moving average, above 50-day moving average. Looks like it cleared the snack line. You want to wait for confirmation about day 2, day 3, and I think this could be a strong move to the upside inside with the crude oil that's already above 50 and 200-day moving average, but stolen, unable to break through this broken uptrend, right? It was a broken uptrend, and now it's kind of overhead resistance. Very large move in Bitcoin, up 10%, facing 50-day moving average. Has spent a few weeks below 50-day moving average, 200-day moving average, and finally buyers are stepping in, buying Bitcoin. And biggest price action are your interest-sensitive sectors. So small caps are breaking out, right? Day 1, day 2, day 3, above the breakout to 10. That's a green light. That more likely than not, this is a confirmed breakout. There's not much really overhead resistance, and this catch-up trade that everybody talked about for the past 2 years, maybe that's finally starting. Could push to 240. And regional banks are participating as well, and even mega cap banks are also breaking out, despite Friday was a weaker reaction. But Goldman Sachs delivered on the earnings today, and it's up 2.5%. Bank of New York delivered, and they're breaking out, up 2.5%. We have Bank of America tomorrow. We have Morgan Stanley tomorrow, and a lot of regional banks, STT, PNC. A lot of regional banks are announcing earnings, so potentially large move in the regional banks as well. Spiders continue to make new all-time highs. QQQ continues to make all-time highs. Value stocks are breaking out, new all-time highs. Technology, high yield is stable. VIX rallied, not a lot, 4%. We do have VIX expiration on Wednesday. We have monthly expiration on Friday. Lalit, hello, welcome. How are you? Keith, let me know. Can you hear me?
Yeah, can you hear me?
Perfect. About maybe the breakout in small caps, interest rates. What is your view? How far can we push this breakout?
Yeah, so I mean, for me, the big question is definitely going to be in the small caps. I mean, seeing those breakout here, it's pretty exciting for people that have been looking for this rotation for a while. At the same point in the short term, with a 75 RSI, that's a pretty high short-term RSI. We've definitely got an overbought condition, and it concerns me a little bit in terms of the pace that we can continue. Although I've already been proven wrong today in terms of it, because I honestly thought we were going to start slowing down after the weekend, and another 2% today. So it's definitely looking like a bullish trade in small caps. It becomes a question of, if we start to see some selling again in tech, will that be the next move in order to basically stall? That's kind of the way I sort of envision this now, potential rebalancing going, of slowly selling tech and then buying small caps again, and maybe fixing some of the rotation that needed to occur. We'll see, though.
Thank you. Yes, I agree. Keep in mind, regional banks have a big percentage of small cap stocks, and they are announcing earnings, starting to announce earnings tomorrow. PNC, we have STT. And next week or two, there'll be a lot of regional banks announcing earnings, which also UNH. Yeah, UNH. I closed it a little bit early as always. Nice pop to 530. So I mean, I'm out of UNH. If you held on to it, tomorrow is the earnings, so you have to be careful. Same idea. It could be 550 stock. It could be 480 stock. So just something to keep in mind as you approach earnings. And Johnson & Johnson is also announcing earnings. So we have some healthcare names, certain. So we're gonna get some flavor of earnings. But their argument was always that small caps are underperforming. If we continue to, this breakout is confirmed and sustained, then on the above average volume, then we definitely have broadening of participation, right? Number of stocks above 50-day moving average moved significantly since the CPI data, and that's obviously a positive sign for the bulls, especially when, mega cap technology are not selling off. So that rotation didn't last that long. Apple is already making new highs today, and some of the other tech stocks. All right. In terms of trades from today, let's just recap them. I did add to AMAT. I think this rotation is short-lived. I think so. I added AMAT and it got filled actually. Right, I was able to capture about 1% profit. So still in AMAT, but open and close position because I got 1% profit. So still have the second half left. LA Lilly. So I closed NVO, rotated intact. Short term, obviously, it's overbought. Long term, I think the trend continues in the healthcare, not specifically in these weight loss drugs. I think almost all my friends are taking one or the other of these pills. Ford did pull back. This was, again, a short signal from active trader. It will announce earnings, I think, in maybe 10 days. 9 days. It's sustainable, then going into the earnings similar to UNH, that rally could continue. We do have retail data tomorrow, so obviously retail data is important. Everybody watches. It's been weak. So if it continues to be weak, then retail sectors, retail stocks could be influenced by that. You want to make sure that if we do drop below this breakout level, you're not down more than $250 on $10,000 portfolio. Personally, I would prefer, $100. Do dollar cost average. So if this is a false breakout, then at least we can think about it, whether we want to stay in the trade or get out. But if you're down 2.5%, then you really shouldn't stay in the trade. Again, we talked about aversion, prospect theory, that we have a symmetrical relationship with money when it comes to looking at your $500 gain and $500 loss. We treat them completely different, right? And the way Keith looks at $500 and the way Vlad looks at $500 is also completely different. So something to keep in mind. And one way to deal with this, I found, is keep profit is more important than outcome, and you document your trades. And if you didn't break your process, when you grade yourself, you give A and B. If every time you're confronted with $500 gain or $500 loss, you make the same decision, right? You don't want to be in a situation where you take the $500 profit, but with $500 loss, you hope and wait that it will come back. And then you're risking to be down $1,000, right, on the $10,000 portfolio. That would not be good. Okay, so that's Ford. I'm IWM. Right, this is the auto execute service. So before market is closed, it will get executed. So I do want to have exposure to small caps. So this is a new trade. I'm pushing the expiration to September to give myself more time. If this breakout is confirmed and we're staying above 200 level, right? This 200 to 210 is extremely important level for small caps. I think, bulls will be able to hold on to 205 to 210. Then this should be a profitable trade. I mean, if we drop below 200, then this, maybe because of the inflation data again comes back and harder than expected. If the next few CPI prints, in August and September comes harder than expected, then yes, this would reverse. Because we had similar setup we had a similar setup here, right, in March. We did break out in March, so it could be the same thing where, if this CPI comes in harder than expected, or Powell says no rate cuts this year, we could see 200 drop or something along those lines. Any thoughts on these trades, Keith? Maybe LA Lilly?
Yeah, I mean, actually, so I was looking at IWM and the way you were structuring it, and yeah, I mean, the way I look at this stuff, obviously, as well is where the implied volatility and realized volatility is here. And right now, implied volatility has been going up in the small caps. Part of that's from earnings, but we're up in the 16.5%, which is where tech is as well. So right now, a little bit elevated tells me, like an in-the-money call spread, like what you're looking at from a volatility perspective makes sense. as well as from a technical. So I like the idea there for IWM in particular as a way to play for a potential for a slowing of the move if the momentum is going to continue just at a slower rate. And even if we get a bit of a pullback, it can be still a good trade to have like a 205, 210 call spread on versus trying to buy like a 230 call looking for an explosion.
All right. Thank you. Thank you. All right.
Thank you.
Positions. So what else we have? Still short DIA. I think it makes sense to be, at least one of your position to be short. DIA is breaking out. Same thing. Day one, day two, maybe in a couple of days, if we're still above 400 level, we're making new highs. I would maybe close that hedge. Right? It's an August position, so there's not much time. Right? Especially even if we do have a pullback, usually it's end of July or beginning of August, like we did last time. Right? Then it just might not be enough time. So usually I look for no more than 50% loss, right, on your maximum loss on the spread. Right? It's a $5 spread. So at 50% maximum loss, I would get out of the trade because, it could be earnings season just started. Obviously, we have a lot of Dow Jones stocks announcing earnings in the next 2 weeks. So I think it makes sense to have at least one short position, but trade what you see, not what you think. And as long as we're above 400 and it's August position, there might just not be enough. 4 weeks might not be enough time. Keith, any thoughts on hedging? Maybe some bearish trade?
So what I'm trying to do right now is find some names that just really aren't coming along with the market, and these could be names that turn into a quick short squeeze if the market continues to push higher. But a couple actually that have been brought up here in the last week still just seem to be underperforming and staying near lows, like Disney, DIS. It is doing nothing again today in spite of this market rally, staying below pretty much every moving average, staying real close to the lows. If we do get a pullback, trying to buy and call a bottom here. Same idea with Starbucks. Actually, Starbucks came up a little bit over the last 2 days, and then today falling back off lower than yesterday or Friday's low. Looks like it's setting up more of a bear flag than a bullish bias here. So had a little bit of a double bottom type action going on that might fail here. They do have earnings in 2 weeks, so this may be a short-lived break, but it can give a short-term bearish trade if it does break the previous lows.
Thank you.
One other one that hadn't been mentioned last week that I was looking at is Abercrombie and Fitch, ANF. That has been generally actually more of a bullish move since earnings there, the big move in May. But right now testing some of the post-earnings lows. So that could be another interesting one, especially with the retail sales numbers coming out. And their earnings are at the end of August, so a little more time potential to hold that trade if earnings is not part of your bias.
Thank you.
Yeah.
Gary, thank you very much. Gary had a question on support resistance for spiders, so let's take a look. So let's look at our model, stock forecast model. So for the next 10 days, market is overbought, right? Keith talked about RSI being at 70, continue to make all-time highs. So the model is neutral, basically saying that for the next 10 days, we might get to 575. We might get to 575 if the earnings continue to have a positive surprise, right? Beats estimates. On the downside, I don't see much momentum below 550. So 15 points to the upside, 15 points to the downside. So 550 to 575. If you look at the historical volatility, 50-day standard deviation, looking at probability calculator, similar idea, 550, 570. So no difference, 550 to 570 on the historical volatility. And in terms of positioning, right now we're looking at the high open interest at different levels. Spiders is after this expiration, so into Friday, which is July 19th expiration. You do have overhead resistance at 565 is where we are now. There's not much room outside of 565 till July 19th is the expiration. right? So you have 565, 570. So I think there is some overhead resistance on 570 into July, and then into August expiration, because keep in mind, volatility can pick up this week. We have VIX expiration on Wednesday, can spike, right? Because dealers have to reposition themselves. And also we have Friday monthly expiration, which could create volatility. VIX is up today despite market down. So 570, 575 is your overhead resistance. In terms of support, 550. First line of defense is 550. 545. So I think, when you see different models and different, systems kind of give you the same signal, then it becomes more relevant, right? So 550, that's this guy. We have to go to June 17th for the breakout. So that's obviously your biggest support. And then if this doesn't hold, we talked about 50-day moving average, 540. So these are your support number one, support number two, medium, we're talking about a couple of days. On the upside, probably 570, 575 is where you have some kind of consolidation. Keith, what do you think? These levels sound like...
Sorry, I muted. Yeah, no, I think that right now the support levels I'm looking at for SPY are, that the end of June, early July low around 541. Then you've got the previous highs there around 531. Those are kind of those two keys. And then you've got the major supports there that you've got marked on. I think one of those is kind of in line with down in the 549, I think you've got there. Oh, okay. So I see you've got the highs from the end of June here, and I was looking at the lows as well. So yeah, kind of that range right there just seems like a pretty good concern level for the day trader. And then for longer term, I think if you start getting down to those levels, below 549, you've also started to breach the 10 and the 20-day moving average, and that gets a little concerning as well. So resistance is just going to be, for me, defined by volatility. So like you said, using the standard deviations, looking at how high we could potentially go off of that.
Thank you. All right. So in terms of, I did some homework. I mean, Wells Fargo, depends on if you held the stock, when did you close it? It actually did reverse, right? It didn't, close already half of the losses, and it did rally it. So in terms of estimated move for Bank of America, which is tomorrow, $2, right? So the estimated move is $2. I did the calculation using the implied volatility, right? I mean, I think bar chart has a little bit different formulas. I mean, everybody has different formulas, and sometimes they're the same, sometimes they're a lot different. But according to my calculations, like the one that I do kind of on a piece of napkin, you have 78 cents plus 75 cents, $1.50 plus 52 plus 50, 250. So that would be two standard deviation, 250, right? 250, which this is what they're saying. Half of that would be $1.25. So I think 70% of the time it will move around $1.25 on the Bank of America. On the $40 stock, 5% is $2, so $1.50, maybe 3-4%. Two standard deviation will be like Wells Fargo, where it's moving, $3, right, close to 7-8%. So that is my thoughts on Bank of America in terms of implied volatility move, using estimated move calculation. In terms of positioning, I looked at it. It's similar to last earnings cycle. So you do have 2.5 would be around 39, right? 42, 40, 39.5. So if you look at the next 2 weeks, you do have large position in 39.5, 39.5. You do have somebody is buying, but this is September, right? Sorry, this is September. Positioning for the next 2 weeks is around 39.5. The skew, the vol skew is above 0.5, so it looks like there is high demand for puts, right? And there's more put skew. So just like Wells Fargo, even if it does move 2 standard deviation, most likely, if I have to guess, bulls will step in, right? Because gamma, so when it reaches that strike price, they're forced to buy, right? And that's why you see these 2 days to the upside. And I think if there's a positive surprise, I think same thing probably going to happen. So I'm inclined to sell premium, right? Do iron condor. But Keith, what do you think? What would be the structure of, if you had to put on Bank of America earnings trade, what do you think would be another choice?
I keep muting myself. Yeah, I look at it very similarly to Wells Fargo. Like I think you started pulling up there. When I look at the Wells Fargo thing, we had the pullback on earnings that has been bought afterwards. Goldman had good earnings. JP Morgan bounced back fine. I'd be worried about a move really in terms of moving averages below the 50-day moving average and or below the recent lows here, which is around 38.5. The 50-day moving average 39.5. But when I look at also the past earnings, which you did as well, the average realized move has been 2.5%. So given that we're really not normally seeing a move, like 3.5%, maybe 4% is about as big as it tends to get, the $1.50 to the downside would be 4%. So let's call it $40. We'd still be holding support at the 50-day moving average in that scenario. I tend to believe that the market's pricing too large of a move given recent history. So there's not a lot of money in selling a July 19th 40-38 put spread, for example. It's only about a dime, but doing it, working into a sense similar to the Wells Fargo structure that you looked at last week.
Yeah, so I just did 40, so 44-47 call spread, 40-37 put spread. Collected 20 cents. Yeah, so 20 cents on the $40 stock, it might not seem like a lot, but it's still 0.5%. And and we talked about the lows of large numbers, right? Even if I'm, when I did this in my personal account, I did JP Morgan trade, I did Citigroup trade. So if you do 2 or 3 of these trades, like Morgan Stanley, you can assume that Morgan Stanley is going to have similar, but it also looks like a put skew where, dealers are long gamma. So it's similar setup where I think if you do 2 or 3 trades, even if one goes against you, but the other 2 or 3 are in your favor, then that's where you can kind of offset some of your risk by trades. But I think here you do, in Morgan Stanley, there is the 100 strike, there is a pretty large short gamma. So you have to be careful with Morgan Stanley. Stanley, I think a lot of people are selling 100 put, right? Or they buying deep in the money 100 call. It could be both. But Morgan Stanley people are very bullish. And, maybe because of Goldman Sachs is making all-time highs. But Morgan Stanley has been underperformed. They had some issues. It's been a one-way trade for the past few months. Right? And Morgan Stanley is also breaking out. 2024 is kind of, it's up 20%.
Yeah, and there's big open interest there on the July 100 calls. So yeah, it looks like the market's long the 100 calls in Morgan Stanley for this week, and so far so good for them, right? They're probably long the hundreds against the maybe some 105s short and some. Is it the 110s that they might be short, or did? Might have been a little bit closer to the money. In any case,
right?
It's 105s. It looks like.
Yeah, people could be long 100, short 110, definitely. That would be one of those. But, every time I see something like this, again, you have to be careful because if Morgan Stanley, Goldman Sachs, you could have quick reversal, and instead of being kind of it could be a magnet, it could be repellent, right? The dealers might, if there's a negative earnings, dealers might push the stock 100 and, even, 95 very quickly. Morgan Stanley, right. It'll be a 2 standard deviation move, right? It's not going to happen if it's, let's see what the Morgan Stanley exposure.
Actually, that's a good point. It looks, I didn't even look all the way down to 95, but it might be that they're short the 9,500 call spread. In any case, that would probably just be a hedge to a long position as opposed to an outright bear play.
Right, but Morgan Stanley, last 2 earnings, 2 earnings ago, how much did it move here?
October was 4%, just over. It was about a $4 move.
Yeah, so usually it doesn't gap as much.
Oh, sorry. October was 6.5, almost 7%. I was looking at the January move.
Yeah, 6.5.
Yeah.
So it could move beyond the estimated move, right? So just when you're selling 100 puts, like everybody who sold these 100 puts or long 100 call, they could get in trouble very quickly if the stock moves tomorrow the other way. Bank of America doesn't have that open interest, so I think for the most part dealers are along the gamma.
Yeah.
You have something here, but it's at 41 strikes, so not close to our strike price. Any questions on support, resistance, earnings trade? Gary, what are your thoughts on Amazon and Tesla? Keith, you want to take those two, Tesla and Amazon? What are your thoughts?
What are your thoughts on Amazon and Tesla? Let's see what we got there. So I haven't looked at Tesla today. Yeah, it looks like Tesla is finding that support for a bounce back. So to me, Tesla's kind of in that sort of creating a triangle type mode here. We'll see. It'll either it'll either break out to the upside or break out to the downside. But first, maybe a couple more days of consolidation. So for me, I'd look for to stay in this range, maybe even through the end of the week, and then look for a bigger technical move if we get to a new high or below Friday's low. It's a big range right now, so letting that tighten up make it a little easier to make a trade in Tesla, especially with earnings next week.
Right. So let's see, going into the earnings, how people are positioning, if we have that animal spirits alive. So yeah, so you can see a similar setup where people are aggressively selling 230 strike, $25, 10%. So somebody is either aggressively selling 230 put or buying 230 call with the idea that the Tesla is going to move to the right? And in terms of overhead resistance, 300. So you have 300, and this is what, 275, 280. So you move probably 10% usually. Let's see. Amazon, how close I am. Sorry, not Amazon, Tesla.
Expected move gets undervalued. So the average expected move going into the earnings is close to 7%, but realized it tends to go closer to 10. So that's and no different this time right now. Actually, a little different this time right now. They're projecting closer to 10%. So maybe finally got in line with that.
Yeah, so I think at least as of right now, this will change, but there are a lot of positioning at the 280 strike. That would be one standard deviation, 300 strike. That would be, 15 to 17% move. And that's so in 2 weeks, it could be a 15% move between now and next Friday. Yeah. So something to keep in mind in terms of position. So 300 is very well, 300 and 280, you have a lot of open interest, and then 230 and 200. And then Amazon, a little bit less enthusiasm usually in Amazon name. Let's see. So yeah, you don't have, people are not selling puts, not selling calls, right? Amazon. And looks like a large position is in 202, implying 5% move. But that's July 19th, July 26th, probably not even. When is the earnings for Amazon?
August 1st.
August 1st. Okay. August, so these. Yeah, so August 1st is yellow line. So 220, implying that between now and August 1st, it could get to 220. 15% move to the upside. It could also drop. People are selling 175. So about $17. So 8%, 10%. I think usually for Amazon is by August 1st, let's see, 10%.
Probably a little more than that for the overall move. But yeah, 7% of earnings and 3% of regular movement.
Right. So that's Amazon levels. Again, usually I don't put these trades before the earnings, unless you think there'll be a run-up in Amazon. Right? You might say, well, as we get close to the earnings in Amazon, the market could push it higher. But today it's down. It looks like it's consolidating. I would watch 50-day moving average. We're kind of getting close to it. We broke through the snack line, so we could, get the 50-day moving average. That's why, you kind of want to wait. With UNH, it was oversold, so we did it the other way around. People could take some profits going to the earnings. All right, any questions? All right, so we talked about earnings trade. We talked about Dow Jones, Ford, FXI. We went over FXI. General Electric is August position is where I'm concerned. So General Electric, I'm slightly down on that spread. It's hovering near 50-day moving average. We have earnings on July 23rd, right? So I have a week. So if the earnings are strong, maybe I can close it. Probably want to. I'm right at the money, so that's 155, 160 is right at the money. So after their earnings, if General Electric does move, I might lose all the premium if the trade is, if negative expectation, right? General Electric, the expectation, could move 8%, right? 8 to 10%, July 26th expiration. So you have to be careful. As we're approaching closer to the earnings, they maybe just close the trade and move on. Since it's August expiration. If it's September or October expiration, you have time. It's a strong stock, maybe just like Wells Fargo, it's even on a down move to 150, it could recover because it's been consolidating since April. But, August, you just don't have enough time. Google is September, so I'm long Google, but I have time. And we talked about Eli Lilly and Silver. Silver continues its march forward together with small cap stock, very sensitive to interest rate and the dollar. I'm a buyer into pullback. Keith, can I make you can you share the screen? Maybe you can, if you don't mind.
Yeah, so you want me to take over here?
Yeah, if you can take over, and I'll stay for maybe the next 5 minutes, but then I'd like to leave, if it's possible.
All right, I just have to remember how to make myself presenter.
Let's.
There we go. All right. I think I have the right one here.
Yeah, I see.
That's the trading circle one, so I'm going to switch to the other.
Yep. I see.
Here.
Japanese dollar pair.
Yeah, gotcha. Yeah, so one of the things I was looking at right before that was the yen, and then I was looking at Google earnings stuff here since you had brought that up. Google earnings are on July 23rd. I think I had shown this to some people that were on Friday. We've got this tool here in LiveVol that I use where it shows the average implied move, which is here with the blue dots, and the average realized in yellow. And the way I usually look at that is that traditionally Google does actually move a little bit more than the market prices in, but every once in a while, like April of 23, so just over a year ago, you get almost no move, and that's where those people that have been buying premium can really get burned into earnings. So Google's obviously pretty volatile on earnings for such a large company here to get 7.5% on average. The one that we had looked at right before with Amazon, you can see that the market really prices earnings moves pretty well here. On the whole, it tends to be pretty in line. I think Tesla, pretty much almost always moves more than the market expects. So that long volatility, long gamma seems to be generally actually a better play in Tesla, even if that, every once in a while you get burned, like in October of 22, a small loss for the person that was buying options going into it. But I would not be surprised to see a big move in Tesla earnings, especially given what we've seen already. So yeah, I think that there's some definite earnings movement out there. Other iron condor suggestions. Oh gosh, it's an interesting question. One of the ones that, let's see how the AMD implied volatility looks going into earnings. So we've got July 30th for AMD earnings, so it's about 2 weeks, and you can see that the implied market tends to be pretty in line there. So I'm not seeing anything major there to say it should be, looking for a iron condor there yet. What else did we have this week that was interesting? Let me go back to my earnings calendar here. So we looked at Morgan Stanley, which is tomorrow. We can look at PGR tomorrow. That's might be reasonable enough. So now, because again, you sometimes get this just crazy move here of 13%. I'm not sure I'd want to get too aggressive with that. Schwab, let's try that. So Schwab, the average actual move is generally pretty small. You get this outlier here in July at 12%, but generally speaking, we're looking for some small moves, 2-3%, and right now it's pricing in this 4.5%. This could be a spot for an iron condor. Using that same idea of it's going to be hard for it to get below the 100-day moving average here at 72, but in particular, I think that it would really struggle below 70. And then on the upside, 80 just in general, but honestly, this recent range of 77. So if we're thinking that there realistically it likely stays within, say $3 of current prices, there may be an options butterfly here, selling like a 72.5, 70 put spread. That would be $3 to the downside, which is about 4%. You can collect about 40 cents on that. And then going the other way, it would be 77.5 or 78 call. And from the technical side, I'd probably go towards maybe go to the 78 to give just a little bit more room. But actually, because you want the $2.50 wide, same as this, so I guess 77.5 to 80. So could collect 60 cents on this call spread and about 40 cents on the put spread. That's about $1, 40% of the max width. And it's all just playing off of these earnings that are coming tomorrow before market. So if we get a very small move, that would be, roughly in line with the recent moves. $3, you'd stay right on the edge of that iron condor. So it's a little bit risky there, trying to stay between 72.5, which is really the 100-day moving average, and 77.5, which is just above the recent highs. But if earnings come in even close to how they normally do, which is generally pretty in line, it looks like there's a limited move potential here that might make this one interesting. And the comment of GE being in a good zone lately, but having earnings coming up. It's similar to what I'm seeing here in Schwab in terms of being in that range, and it's definitely been in a range. But the potential move for 3.5% next week could certainly break us 6-7%. Then we're talking about a lot of change to the $5 that gets us to the bottom of the range or to the top of the range pretty quickly. So that could trigger a post earnings breakout or a mean reversion again. So, but given that we normally see smaller than priced in moves here as well, it makes it a little bit easier to potentially bet on that. But you can see that when we get more than the average of 3%, we can get up to 6, 7, 8%, and that's a little scary. Versus Schwab, it was pretty consistent in terms of small moves outside the one big outlier move here. Move above the norm that was offsetting all these smaller moves, while GE had 3 or 4 here in the last 2 years that were higher than the average implied. All right. One other to touch on here for you guys, since we were talking about it on Friday, I was talking about Micron as a potentially interesting way to get into semiconductors. We're slipping a little bit now, so I guess I might have been maybe regretting this if we don't get bounced back tomorrow. But given what we've been seeing in like AMD and Intel, where they were firmer earlier today, but have been kind of pulling back a little bit. Micron's another one that I just thought was interesting, especially without earnings until September 25th. So I didn't have to worry about an early exit. Just something that I could see potentially getting up here into this 145 range, the pre-earnings high, and it ultimately could push 155, 160 if we start getting some real momentum in semiconductors. I want to walk you through what I did for this trade and some of the rationale behind it. So first up, we've got implied volatility and historical volatility here. The implied volatility range tends to be from about 38% to about 45% absent earnings. Earnings could push it up into the 70s. So we're talking about a trade that would expire before earnings. So I'm looking at something in the 38 to 45. So it's really pretty fair here at 42.25%. Nothing particularly screaming buy implied volatility or sell, especially given that realized volatility has been traditionally, it kind of gets these little spikes, but then it fades down here into the 40% range. So nothing too crazy there. You know, we had these big moves here, the June 20th break and then the earnings move, but I don't see a cause for a massive move necessarily. But I was looking at this from a bullish perspective potential here when we were trading above the 50-day moving average. And what I did was I took the September 140 call, and you can see that that's just under 43% implied volatility. And I was looking at like a 140, 160 call spread, trying to capture that breakout all the way up to close to the previous highs. But rather than selling the September 160s, what I decided is to treat this almost like a buy right, where I went to August 2nd and I sold the 145 call this time. And as we get close to expiration, I will just look to roll that out to either the August 9th or August 16th 150 calls and collect a little bit more premium and slowly roll out my short strike out and up as this trade works in my favor. And if it doesn't work out, you know, I've got 2.5 weeks before this 145 call expires. But I've got a full 2 months before my September long call expires. So I can collect a little bit of theta. And if we stay here or higher, I should be seeing a small profit. And as we go higher, I can work on rolling out my short strike since this is a net long delta. And so it's kind of an interesting way to approach some of these trades. So let's see, the general idea here was in MU to sell. I have to do it that way. My apologies. To sell the August 2nd 145 call. So you can kind of see the pricing here on this. And right now, the net is 516 to 523. I think I paid 537 or something. So a little bit above market because we pulled back about 70 cents since I entered this. But generally speaking, the worst case on a bullish thing, if we went to, you know, $200, it would still be worth $5. Ideally, that's not. This is a way to do a call spread type payout while also giving myself some flexibility by doing it as a diagonal. So that was one of my recent ideas here, something from today that I thought you guys might be intrigued by. So you can see net long delta, and generally speaking, I've got a small collection of theta and a slightly short gamma with prices here. Let's see what else goes. And we can look at semiconductors on the whole if you'd like. So semiconductors still showing some decent support here. We had tested that 20-day moving average before. We had the big pullback, stopped at the 10 and continued higher. Today we have an inside day, higher or low than yesterday, low or high. This week could be interesting for it since we don't really have earnings driving. It's just all going to be about technicals. Will we see technical selling in tech to offset all the buying in small caps on that rotation, or will we continue to trade sideways or even higher in tech while people are just have money to put it into small caps? That's I guess the big question right now. So let's see what else we have going on here this week in terms of earnings. Let's try kind of get a little preview into Wednesday. So on Wednesday, there's nothing I'm particularly excited about in terms of the trades, but Thursday we start getting some other interesting ones here. I know Synchrony Financial has been one you guys have been watching, so let's pull up the chart there as that comes into earnings. So making a new high, regional banks has been mentioned, have been very strong. Synchrony Financial is another one, similar situation here where the realized move tends to be pretty small relative to implied. We've really only had in the last 2 years slightly outperforming the implied and slightly outperforming the implied move, both on bullish case scenarios. We're trading at highs, so that could create a little bit of a liquidation potential, but there could be some opportunity here to sell some premium, particularly I think if we get a little bit of a pullback, because then that creates, generally speaking, that there's some support here in that 47 to 48 range. So that might just be an interesting one to look at a little closer here prior to earnings on Thursday. What else do we have here? ASML. So it's another one that's, I'm not sure how liquid the options are in this one right now. Now that it's $1,000 stock, that might be a little bit too crazy for a lot of people. So I'll skip through there. Johnson & Johnson, very low volatility stock in general. You can see it normally moves at about a 11-12% kind of move range. So it's and for earnings in Johnson & Johnson, again, generally speaking, seem like they underperformed the expected. We had one very bullish scenario in July, but generally speaking, other than that, slightly bearish. So I think that kind of tells you a little bit about how people tend to approach Johnson & Johnson. It tends to get bought a little bit going into earnings and then not quite meet expectations. Here we actually sold into earnings and then still went further down. So I'd say that there's some support here though around the 144 range. 144, so about $5, 3%. And right now the expected move on the earnings is about 2%. So 1.5 standard deviations would be the clearer support to me. With these weekly options, the 144s are 33 cents. Looking at something like the 144s versus the 141s, roughly 20 cents just under for that put spread. And then to make it symmetrical or close enough to it, it'd have to be about the 155, 160. We don't have dollar strikes to the upside, so that makes it a little tougher to do an iron condor there. That's even. You probably have to look at the 145 in that sense. And that kind of makes it a little questionable because of the support being a little below 145 to me. But Tiva, so we've got a couple of weeks till earnings, July 31st, before market opens. It's going to try to get a breakout here, it appears, with June 12th high being 1769. So if we get above 1769, I start looking at potential for outright long calls. Otherwise, fairly ranged around 30 to 35%. So, this week's options really need a breakout to justify a position here. And obviously the market's not really pricing in that breakout with the 17.5 calls. 7 and 11, they're pretty cheap here. 26 delta, so this is something that's kind of a low probability event already. I don't see a huge need for a trade in Tiva right now, to be honest. With earnings in 2 weeks, there might be some justification to selling a downside put spread that expires before earnings. These July 26th, 16.5 put spread for 16 cents, or down to the 17, for 24 cents. But again, this low downside here is really at 16. So to get all the way down to that strike, there's not much premium left here at 7 cents for these options. So not much I would really be looking to do right now in Tiva, at least. Maybe there's something better, earnings iron condor kind of play when we get closer. But right now, I just don't see a lot there. All right. Let's see. I'll look to see if there's any other good ones for this week's earnings. Ally Financial. It's just a lot of those regional banks going this week. We can switch over and look at another guy then. That's interesting because of what happened in Delta Airlines. So United Airlines are on the 17th as well here. That's after market close on the 17th. And we are sitting right on the 200-day moving average. We got that break when Delta had poor earnings. But as you saw, Delta broke, then recovered, and then has just been drifting back down. So, United basically is pricing in a similar scenario to Delta here already, being at the 200-day moving average, having already broken, like it's just inevitable that they're going to do the exact same thing as Delta. And honestly, the market's pricing in roughly what normally happens here. The yellow dots and the blue dots are kind of in line with each other. We do have that potential for a crazy outlier. April up 17.5%. That's a 3 standard deviation move, roughly. 2.5 standard deviation move. July 20th, there was about a 1.5, almost 2 standard deviation move to the downside. If we are to get another 2 standard deviation move, frankly, given where we're at in terms of United Airlines pricing, I would be more inclined to guess that has bullish scenario for a big move, much like we saw here in April, where we opened up high and then just kept going because we were trading off of the lows. If we get a bearish case, I think getting back down here towards 40 is not, wouldn't be out of the question, but we've already priced in some of that move because of what happened in Delta. So we already broke from 47 down to 44, already did about 8%. So if I'm going to see a potential for a 10 or 15% move, I think it's probably more likely to be to the upside. So the options here for this week, that would be 10% to the upside is almost 49. There's still it's a lot of squeeze that we're betting on in that case, but the 48 calls are priced pretty well for that move, for that outside outlier type move to the upside. So I'd probably look something closer to at the money and do a call spread, like a 46.50 call spread for 80 cents isn't a terrible way to express that. These are short-term options though, so if I'm wrong, this goes to zero. So I really have to define my risk on a trade like this and understand that while the 46s, there is some open interest here and it looks like it's some buying interest, and 50s, there's some open interest here. So that's likely been some call spread purchasing here, given where implied volatility is. I'm going to lose 100% of the premium paid. So if I pay 85 cents for this call spread now, I have to be risking 100% to potentially make 100, 200, 300%. So it's got a big payoff if I'm right and the stock goes all the way up to 50. But if I'm wrong, I know I'm risking it all. It's not like there's going to be any premium left in this on a slightly bullish scenario. We go to 45. The 46 is just still worthless on the close on Friday. So if there are any other questions, I'm happy to take them now. Let me know what you guys are looking at here. We can do last look here. I know that we already talked on SPY here, but we can look at the way that we're handling the close here. So I like to look at about a 5-minute chart, and you can see we had that selling pressure that is now getting negated a little bit, which is good as we go into the close. So we're sort of slowing down on the selling. It got a little bit dicey there for the last half hour, but it seems like we found some footing. Micron as well, the one I had just entered about an hour ago here when we were trading in the 131 range, now is bouncing back and looks like it has some buyers into the close, which is good for my trade. And overall, the market is going to hold on today, and then we'll just see how it goes tomorrow. So overall, not a terrible day. Some of these, alternative global clean energy go along hand in hand with the oil stocks like OIH and XLE, and you see them performing well right now, while ICLN is down. So to me, this could be of some interest here on the break to look at tomorrow and look at some of the names that are inside of these clean energy stocks. Tesla is one of them. Sun Power, I can go into solar. I can go to TAN, the solar ETF, which is struggling here. And while they're not 100% correlated, when I see oil stocks doing well, I often see similar here to this stuff. So this will be stuff to review, I think, a little more closely tomorrow, though, and see if this break is a buying opportunity after the original breakout type move Thursday, Friday. All right, it's coming up on the bell here. So any final questions? And if not, it's just Monday. We got plenty of days left in the week to talk through some ideas. Looking forward to talking to you guys again tomorrow along with Vlad. So if there are no other questions, why don't I leave it here then, folks? And Tiva, I think we talked about as well, I'll say right now, with earnings in 2 weeks, the premium to collect to try to sell option premium heading into earnings just doesn't seem there. We're in a tight range. Absent earnings, I was looking for an iron condor that maybe expired before earnings, but earnings are pricing in kind of what normally happens. And you do have these crazy outlier moves that make it a little harder to really price for an iron condor when you got that potential that this thing could move 3 standard deviations off of an earnings announcement. So for me, it's kind of a no trade, given that we're a tight range, not enough premium to do an iron condor that expires before earnings, and just through earnings that would justify a big trade here right now. All right, folks, and with that in mind, why don't I let you all go. Have a wonderful Monday evening, and looking forward to talking to you guys more tomorrow. Have a good night, guys.